I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. At a fundamental level, we all know that insurance is a force for good in the world. You pay a relatively small premium, and if your house burns down, an insurer will help you rebuild it. But I'm sure most of us will, at some time in their careers, have felt that what we do day to day in our insurance jobs has become increasingly removed and disconnected from those basic principles. Well, today I'm talking to someone who is trading a highly successful career in our insurance world for a new career, concentrating 100% on the good that the deployment of the know-how and structures that the insurance industry has developed can have on the poorest across the globe. Charlie Langdale is CEO of Humanity Insured, a charity that deploys its funds to subsidise insurance premiums for developing world insurance programs. The aid and development community is very reactive and only tends to arrive and try and pick up the pieces after a major loss event has happened. Charlie is arguing what all insurance professionals already know, that having that assistance arranged up front in the form of insurance is more economically efficient by many multiples, especially when that insurance is combined with investment in loss prevention and risk management. This podcast goes right to the heart of the economics of aid and development. In it, Charlie shows how insurance can be a force for good and help lift people out of poverty, and eventually convert them into growing insurance customers of the future, all because of a little pump priming from organisations like Humanity Insured. In a world filled with gloomy headlines, it's easy to despair and feel that some of the problems facing humanity are simply insurmountable. I guarantee that half an hour with Charlie will inspire you and put a spring in your step. For not only does he believe that the problems can be solved with the economic resources we already have at our disposal, but that it's our industry that has already developed a lot of the solutions the world is going to need. Whether it's responding to extreme weather or even saving endangered species, Charlie has a story to tell about how insurance is already helping hundreds of thousands of people. Charlie is an exceptional person doing exceptional things, and this is an inspiring encounter that I really enjoyed, and I think you will too. Enjoy the podcast. Charlie, welcome to the Voice of Insurance.
Well, thank you very much, Mark. It's really great to be here.
You're a very well-known figure in the business, Charlie. In fact, I've probably spent the last 15 years having people telling me that I should meet you because you're a nice guy, you're smart, and you're really interesting. We haven't actually met until today. Anyone else who doesn't know you, why don't you just do a potted history of your career to date and how you've managed to get where you are?
Okay, so I've been in the market now for around 30 years. The last nearly 25 of them, I've been at Howden. So I joined Howden when there were 90 of us here, and I've done various roles here, primarily financial lines, until 2021, where I decided to take on this new challenge of Humanity Insured.
So tell us about Humanity Insured.
Yeah, so it was quite a strange one, really. David Howden and I and some others went up to the COP26 conference in Glasgow in 2021. And there was a real moment there because we heard this speech by Mia Mottley, who's the Prime Minister of Barbados. And she invited the private sector in. She just explained that the big existential problems of tomorrow are just too big for governments alone. And she made this appeal, where is the private sector? What is the private sector doing about risk? How is the private sector going to lean into this problem and offer its tools? And we couldn't help thinking, my God, she's talking about us. Actually, not us, it was the insurance market. So that was sort of a real moment, and it gave us a chance to sort of investigate that conversation a bit. And, you know, it turns out that there was a real moment in time there, because the way that the world deals with disaster relief, humanitarian disaster relief, is frankly a bit strange when you've worked in the insurance market for a few years. Because what we do is we wait for a disaster to happen, and then we raise some money, and we go out and try and see what we can do to help the people who are suffering for that particular disaster. And the idea of getting all that ready in advance and having tools which allow us to get ready in advance and using mathematics and science and predictability and all the tools that we know and love in the insurance market, that in the vast majority of cases doesn't really exist in places in the world which are really in the eye of the storm for the world's most vulnerable. In fact, only still 98% of all disaster relief is arranged after the event, still today. And not only that, we found at that COP26 conference that there's not enough money. And that is, even now, you can see that's even worse, right? So in 2008, the shortfall in humanitarian funding was about $1 billion. By 2021, when we were at COP26, it was $20 billion. It's growing to $50 billion now, and I'm afraid that it's going to get worse. Why? Because there's an increasing level of severity and frequency in natural disasters globally, and humanitarian money's running out.
So most of the major developed economies have shrunk back from what they were giving before.
And they have as well.
Yeah.
So it just means, so during this process over the last 5 years, we've realised that it's not a sort of a, wouldn't it be nice if we used insurance for these types of things? It's an absolute necessity. It's bizarre and extreme not to use these tools. So there's a moment in time in terms of the demand and need. There's also a moment in time in terms of the ability for us to actually use insurance because of moves in technology and the ability to distribute to lots of people in one go and all those things like parametric insurance and stuff like that.
So this is the sort of why you're doing it,
Mm-hmm.
and this is the problem. How are you going about it? And I've had, for example, the Insurance Development Forum
Yes.
on the show a couple of years ago now.
Yeah.
How do you fit in with them and make sure you're not all getting each other's way and you're working together?
Well, actually, the Insurance Development Forum, we're very proud members of that, and we support what they do wholeheartedly. And one of the reasons for setting up Humanity Insured was sort of with their encouragement, actually, because Humanity Insured is a funding vehicle. It subsidises premium at an individual level. RDF is much more macro-organised and government-organised entity to try and help people understand what insurance can do. So for Humanity Insured, we felt there was something missing. And the first thing missing was a very large number of people simply cannot afford to get anywhere near the market. So there needs to be something done there. Secondly, the advent of technology and parametric-based insurance allows us to deliver insurance in a way we probably couldn't 10 years ago. And third, because of parametric insurance, we can explain insurance in a different way to people who, do you know what, often don't really trust the instrument in the first place. So we have a number of hurdles which we felt Humanity Insured could really do quite a good job in scaling.
It's a bit like the multiplier effect. If you did $1 of aid, but if you did $1 in premiums, it would be more useful. It would do more work.
And the research on that is very well documented. So take something like the Pakistani floods a few years ago. I think I get my facts right, but if $1 before those floods would have equaled the equivalent to $9 raised afterwards. And not only is it that type of factor, which is important, i.e. 1 equals 9 of insurance power, it's also that sometimes a 9 is promised and doesn't turn up. And sometimes it turns up way too late. So there's this beauty of using the power of science and the guarantee of the insurance market to deliver something certain on time for the benefit of the people themselves. And that is actually the essence of what makes Humanity Insured work.
And the philanthropic nature is this premium, either you're paying all of the premium or you're subsidising the premium on behalf of clients around the world.
Exactly. We like people to have skin in the game. So what we're interested in actually is how buying an insurance policy influences somebody and allows them to deal with the future themselves. It's an empowerment and ownership thing. So we know that someone puts their hand in their pocket and puts $1 on the table and buys a crop yield insurance or parametric against drought. We know they've taken that decision because they're protecting them and their family from drought that year. And what we're interested in is not actually the drought when it hits and the claim payment. We're interested in what that bit of decision does for the way that person deals with the risk. An example might be, do you know what? I'm buying a drought and crop yield insurance and I'm paying $1 for that. And Humanity Insured is going to pay another $1. So now I can buy a limit which covers all of my harvest. Now I'm going to send my children to school because I can afford to do that now and it costs me money. Without the insurance, do you know what? I'm not sure I can do that for my children because I've got to keep some money back in case my harvest fails.
Yes.
Or maybe I'm going to sow all my seeds this year. Why? Because I know that if there's a drought, I'm going to get paid and I can buy seed again rather than keeping some seed back. And when there's no drought, that affects yield if you think about it. So what we're interested in is what does insurance do to the ability for someone to take ownership over the peril themselves? And the reason why that really struck my imagination is because we sleepwalk through the insurance market as people in the UK, don't we? Insurance is a grudge buy at best. We take totally for granted that society will pick up the pieces when things go wrong. And if you've got no safety net, a tiny bit of insurance is magic. That is what we're trying to demonstrate and show.
With that being devil's advocate, then, would it be that But what about the risk management? They said, well, I don't care anymore. I won't be able to be a sort of mound, stop the river coming in and flooding my crop because Humanity Insured is going to come pick it all up for me.
No, it's a great question. And we actually learned a lot from the IDF on that, actually, and others. We leaned in very heavily into the experience of other people in space.
So that's why you've got that co-insurance.
Well, yeah. But also another thing is we will not put any money on the table for any insurance premium subsidy unless we're convinced that all our other resilience building methods are there. So we absolutely are making certain that that type of outcome does not occur, because we simply won't get involved with projects where it looks like that might be a factor.
And of course, the person probably behaving that slightly perverse way, in the end, they're not doing themselves any favours, because of course they make that insurance unsustainable and then there's no insurance available next year because they've been burnt. So
yeah, I mean, the other side of that is that we are real believers in someone receiving some money and them being allowed to decide what they spend it on. So a bit in the vein of direct giving type movement out there at the moment. We want a person to have the cover and be paid and decide how they spend it. But at the same time, they have to have those resilience protections in place before we'll invest in the first place, put it that way.
But what about the underwriting side of it? Are you as concerned about an underwriting profit being made at the end of it? There's often a question, isn't it, that is this aid or is this a venture? That do you have a profit motive? And I suppose without a profit motive, ultimately, you don't necessarily have a sustainable model, because if it's making losses, even if they're a little bit modest, the more you scale them, of course, they become immodest at some point.
Well, look, Humanity Insured is a charity. Its charitable aim is to alleviate poverty. That's all we're here for. All it is a pot of money. Okay? But we've realised that pot of money, if it's going to have meaningful results for the people, our target audience, over a long period of time and scale, we've got to allow that audience to act in the real marketplace. So we got a lot of questions when we first set this up, which was, okay, guys, so you're going to subsidise insurance premium, are you? Presumably you're going to go back to the insurer afterwards and get all the profit they've made. And I said, no, we're not doing that. No, we want the insurers to make a profit. We want the insurers to come back to us next year and say, by the way, Charlie, that fantastic project you've got in Syria, give you double the limit next year, because we think this is sustainable, good business for us, because we think that's how you grow access to the market. You don't do it by starving insurers of any profit. But we want the market to compete. And we want to compete in a thorough way. We don't want insurers to take advantage of the fact that there's premium subsidy there, but we want them to compete the real price. And this has a couple of really nice elements to it. So, for example, when you go and visit a population who are facing a big existential problem, like a drought, and they say to you, well, look, we tried going to the existing insurance market, Charlie, but the thing is, the insurance market is only offering me 1 in 10-year exposure. What Humanity Insured can do is they can offer them something that they really want, with something which is like a 1 in 2-year program, because we're using philanthropic money, and it's a very, very good use of that money at that point. And it allows a population to grasp what the insurance tool can do, get themselves protected, get themselves prepared, avoid potentially starvation, extremely effective use of philanthropy, even on a 50% rate online program, and then build catastrophe above it. And the beauty of all of this is, for us, even in our very early days, and remember, we're only 5 months old, is that it's shown that by introducing populations into the market, we can gain scale quite quickly, and we can move people more and more into a more sustainable commercial buying process. So our objective is to be unnecessary after maybe 5 years.
Because I suppose that 1 in 2 thing is the thing to get them over the hump. You do the 1 in 2 for 3 or 4 years, and actually by the 4th year, you could probably take it yourself. And that could be your deductible.
Sort of, and that actually is a thought process that we are seeing happen already, even in the very early days of this. So because our aim is philanthropic, that we can do things that just don't make any sense commercially to begin with, but are absolutely, completely necessary with certain populations if you're going to get scale in the future. And that's all it is, really.
Why are you poor? Well, I'm poor because I'm poor. How do I get to become rich then, please? Can someone help me?
Someone help me. And by the way, tell you what, I'm poor, but I'm going to invest in my future. But do you know what? Can you just help me with some of the things that are going to stop me ever getting above the poverty line? Like, I don't know, extreme heat. Those problems we can deal with. If you think about how much more powerful that is than waiting for the problem to happen and then try and deal with this humongous issue over here. It's these types of, which sound quite strange to begin with, but when you get under the skin of it and you talk to populations yourself, you realise that that's a really neat way of giving control to somebody for the very first time. I think that's the point.
So run us through some examples of the sort of things you're involved in. I suppose, when I conjure up an image in my head, I was assume it's probably crop to start with.
Maybe I can give you a few examples that may not be totally obvious, which I think are really nice. So I'll give you two. We have a lovely project which we're just committed to just 2 or 3 weeks ago. And it's a human-wildlife conflict project, right? Now, I've never even dreamed that insurance could be used to help deal with elephants being poached in Zambia. And actually, a lot of people have thrown a lot of money at this problem. And that usually results in people building bigger and bigger fences to try and keep animals and human beings separate.
So this is where I'm going to kill the elephant because it keeps trampling my crop.
And maybe I'm killing my family members and destroying my livelihood. I mean, it's a very big deal. And of course, a lot of conservation efforts in Africa and some parts of Africa have been really quite successful. And elephant populations are increasing in some places. And of course, human populations are increasing. And this is a big problem, okay? So what we've done is that we've invested a relatively small amount of money, $250,000, that sort of factor, of which a small amount of that, some of that goes to resilience building, by the way, and other methods, but a small portion of that goes to buy a drought parametric. And this drought parametric sits ready to be used. When it's triggered, it provides for a compensation fund. That compensation fund is open to 100,000 Zambian farmers who live along the border of this national park. That parametric costs under $40,000. I mean, tiny amounts of money. But there's a very high correlation between drought and elephants and other animals being forced into agricultural land. And so this compensation fund is set. We pay all the premium here. There's no premium spent by the population. But their skin in the game is they can access that compensation fund in the event that animals destroy their crops or various other perils that are named. But they have to also agree not to shoot the elephants. Now, it sounds a little bit prosaic, and how can you prove these things? And it is a bit experimental. But our early calculations, we're working with a very interesting consultancy in Kenya called AB Antheos, who have really established that if we can get this right by using small amounts of insurance premium and compensation funds and building methods along the side, we think that we can actually reduce the poaching of elephants quite considerably, and at the same time provide a way for farmers to cope with this type of peril, which is basically a drought peril, really. And if you think how much it costs to build a fence, there's things like that, which I think are the sort of things that wake me up in the morning and, say, right, I'm coming to work, do that today. Because if we get that right in Zambia, imagine what we can do elsewhere in Africa. So there's those sorts of things where people explain to me, really, you can really use insurance to help people not shoot elephants? You know you can. So we have things like that. And we have more projects where the communities have come to us. For example, we're now involved with 2 fantastic projects in India in extreme heat. So these are women informal urban workers. So these are people out of the system. Okay, they don't have any safety net apart from their own ingenuity together. And when I went to visit some of the communities in question here, I asked, what are their worries? What are the things that really keep them awake at night? And of course, it's water, electricity, food. But do you know what? If it's too hot for them to go to work, and they go to work anyway, they're off work for weeks. And so what they came to us for was, look, each woman decided to put $1 on the table. And they just wanted to collect a pot of money in the community, literally a pot of money, and it would pay out if it was more than 42.5 degrees centigrade for 2 days on average. That's insurance, by the way. I mean, they invented it themselves.
It's a mutual, yeah.
Yeah. So what we did is we just put $7 in for every one in, and we created a real insurance program. And last year, I think we reached 26,000 women. This year, the program we have with 2 separate programs, but we'll have 250,000 women on that program next year. So the key to it is, if you bother to ask people what they're worried about, and you help them build a program out of that, then, so stuff like that. And then, if I give you one third one, and what I'm really interested in, the real thing I'm after is, can we do predictive insurance? I want triggers which are predictive. I want someone to show me how to land an insurance policy a month in advance of a drought. Wouldn't that be awesome? Then you could buy drought-resistant seed. You could put irrigation in place. You could save a whole load of people from starving in the first place. So there's a whole area of insurance which I think.
I suppose you said, don't sow. Right now, we're going to give you the money now. Don't save those seeds because they're not going to. Totally.
And we've got one at the moment which is not yet ready, but it's in sort of development. And it measures the rainfall over a lake in Africa. It's an African one as well. And there's a very high correlation between rain over this lake and then flooding 2 weeks later downriver. Awesome, yeah? So what we do is you just trigger a parametric on rain and you give the people money before they get flooded so they can get out of the way. And even if that was a 1 in 2 year deal, that would be an incredible use of philanthropic money. So you see what I mean? So Humanity Insured's main aim is for people to come to us and say, have you thought about this? We can trigger things on this. Have you thought about this population there? And that's sort of one of our asks, to try and get ideas that we can take hold of and help make happen.
I suppose, yes, you just need to get out there, because they're going to be the people to tell you what the product should be.
So we do. So the beautiful thing about Humanity Insured is that David was very generous when we first started and has allowed us a budget to help us get Humanity Insured off the ground. So Howden incubated Humanity Insured. Now it's an independent charity supported by Howden and 8 other insurers who have been incredibly supportive. What this has allowed us to do is to build a small delivery team of 9 of us and go and visit people and ask this sort of question. And actually, that's what was needed, really.
It suddenly occurred to me, of course, the regulatory side of these things. Of course, these things, how licensed do you need to be in all these different countries? Or have you got members who've got licenses in every...
Well, we do. Nice thing is we have, the likes of Allianz and AXA XL.
So it's quite handy. They've got a pretty good network.
Very good network. But I'm the only insurance person in Humanity Insured delivery team for a reason, because we're not an insurance broker or an underwriter. We're just funding. So to do anything, all I can do is sit down with the community and say, gosh, that looks a little bit like insurance. By the way, have you thought about asking an insurance broker or an underwriter whether they can put that into a format that actually can do something for a large number of you? Because if you do, I'll pay for that. And that's sort of what our role is, and no more.
What about the resilience side of things? Obviously, we all know a stitch in time saves 9. Because you're a charity, you can have that freedom. Would it be sometimes better to build a flood prevention wall rather than give them flood insurance?
You've got to do both. You just have to do both if you can afford it. But as we discussed before, you can't have insurance as a disincentive for resilience building.
Yeah.
And sometimes they go very much hand in hand. So I'll give another example, right? So we have a project which is an irrigation project. And what it is, it's solar irrigation. So basically, populations are offered the chance to buy a solar pump, which can help them irrigate their crops. By doing that, they become less susceptible to drought. And guess what? The insurance policy that they need to buy for drought becomes cheaper. I mean, blindingly obvious, extremely scalable, but it needs a bit of philanthropy. And it makes the insurance premium a bit cheaper because we're now higher up. We're only going to kick in when the drought is so severe that it's going to...
there's nothing left in the water table.
Totally.
Yeah.
What's more, we think that it's going to encourage cheaper debt, because we expect that the loan these people have to borrow to buy the pump will become cheaper because the individual becomes more secure. You see what I mean? So the knock-on effect of having protection and a tool to help you become more resilient, like a flood wall or irrigation, I think is really what the multiplying effect of all of this, really.
What about the claims side of things? Have you been going long enough to have had claim situations?
Yeah, well, I mean, the thing is, we've had our first claim in Malawi with the Tear Fund, which is a fantastic charity which helps people all over the world. But in Malawi, they got a very serious drought. And that triggered in February. The payout was paid to Tear Fund within 4 days. And we've got a very good report back from that. I think we're on the brink of 2 more claims just about to land or in the process of landing. It's quite early days. And we've only been going for 4 or 5 months. We have only got 10 grantees. Yes, we have claims and they're having some impact already, basically.
And I suppose, there's always going to be the analysis and the lessons learned from each one of those situations.
And that's nice, right? So claims good because it demonstrates very clear to people what the insurance does. But as I said before, the value of the insurance is actually there without the claim. Because what the insurance does is it allows someone to invest in their future in a way they wouldn't do without the insurance. And if they get a claim, then that's a proof point of that behavior. You see what I mean?
Yes.
And I think that's what I think about all the time. But we do want these programs to be long-term, sustainable and repeatable and renewable and all the rest of it.
I suppose insurance has been a rich man's game partly historically because it's been so frictional. It's been so expensive, so much paper. And you've already mentioned about parametrics. And do you think the key of really being able to deliver these things at this kind of $1 policy level is going to be the technology that is going to withdraw all that expensive friction? And obviously you really can't afford to be sending adjusters around looking at 3 rows of beans, literally.
No, you can't. Quite right. It is. That's the truth of it. And, the amazing sort of rollout of mobile technology around the world has allowed you to do some pretty awesome things with mobile networks, pushing money straight into people's mobile phones who are some of the most vulnerable in the world. But it's not just that. And I think just concentrating on parametrics is missing the point a little bit as well.
There's more to it
than that. I mean, the best programs I think we're seeing is parametrics and indemnity together. So, for example, we have a drought program for farmers in, I don't know, some part of the world. And the drought program itself can't correlate exactly with the crop failure, because who knows, there might be a swarm of locusts which devastate the farms. So sometimes having an overall program based on drought, which is the leading peril, but then a nice little layer of pure crop yield indemnity at the bottom is really neat. And we've done a few projects like that. Yep. So I think the thing about technology and parametrics is that it delivers trust. So the thing about insurance is if you don't trust your insurance policy, none of the benefits of insurance really arrive, i.e., I bought this thing, but is it going to work? Gosh, it might not work. Oh my God, I think actually maybe I better keep a bit of seed back in case of drought. Yeah, seriously. So basically, why we like people having skin in the game and putting some money on the table to buy is because they have to make a decision of whether they're going to trust the policy. And the best way of knowing whether someone trusts an insurance policy is they're willing to pay for it. And that's where parametrics has changed the dial a bit. But we're coming across more and more programs where actually some very cool indemnity programs, technology-driven, without all the rigmarole that we spent so many years involved with, is probably the answer long-term.
What about geopolitics? And that COP26 was a different world. And obviously, politics ebbs and flows. The tide goes in and tide goes out, and day and night happen. We seem to be in a more difficult geopolitical environment for this kind of thing. I mean, much more difficult. Yeah. Does it affect what you're doing? Or I suppose you're just here to assemble a coalition of the willing and get on with what you can get on with?
Yeah, I mean, the thing is that geopolitics has an effect. Of course it does. But the thing about this program, this is just a solution to something that is happening today. The politics around climate change is irrelevant to somebody who's facing a drought, you know? I mean, the fact that insurance can provide a solution to that drought is the key thing for us. And the thing about those conferences is that they're just a way of highlighting that type of reality. And the timescales that we're talking about here, we're not talking about 30, 20 years in the future. We're talking about things happening today, right now. And that's what Humanity Insured is for. And I think if you look at it like that, the thing about these types of weather events is that no matter what happens with the ebb and flow of geopolitics, pretty sure that next week, next month, there's going to be something in the paper which demonstrates to everybody that the frequency and severity of global events is happening here and now, and it's a problem for us to solve. So it's just a solution.
Of course, we've already had wildfires in LA this year. You know, it couldn't be a more wealthy or pointed part of the world.
For us on a fundraising side of things, I'm very proud of what the insurance market has done to allow us to get off the starting gate and provide us with the funds. And the vast majority of the funding we have come from 10 insurers. But we're now starting to receive funding from other corporates, non-insurance related corporates who have supply chains in parts of the world where they know they've got responsibility for volatility too. So we're gathering brand new philanthropic money that didn't necessarily exist before and putting that to work in using the efficiency of insurance. You see what I mean? So I think that for us, what's happening in geopolitics is sort of less relevant.
And do you think from what government agencies are still left and that there's still plenty around, do you think they should be coming in alongside you? So could you have a role there where they recognise you as being the expert, they see the results that you're getting, and then you can say, well, some of that aid should be premiums?
Yeah, absolutely. I mean, we set up a advisory council at Humanity Insured where FCDO have a position in the UK. And we did that because there's so much expertise in government development circles. I really wanted to have an access to people who have been in a space doing it, understanding the exposures and what needs to happen for decades. And we haven't ever asked for any government money because we are a private sector charity and we want to maintain that flexibility as much as we can. But sitting alongside programs where we can help maximize our impact and display that to everybody would be great for us. But again, we only launched in October, so it's early days.
We were talking about the problem that's here and now. We often wonder, do we have the economics available to us to solve the problems of today?
Yeah.
That's why you're so optimistic. It's good to hear. It's good to hear, because sometimes we think we despair. It's just, this problem's only going to get worse because, we know climate change and whatever else, or humans encroaching on nearer to those elephants and other things. We're only going to get more elephants trampling our stuff if we keep getting too near to their patch. It's good to hear that you think we certainly have the economics available, that, the premium is available to solve those problems and to pay those losses, even though we know they're going to get worse.
Yeah. I mean, I think the beautiful thing about insurance is that it is a very optimistic industry to be in.
Yes, well, I was a broker, and you can be a pessimist if you're a broker, but if you're an underwriter, you have to be an optimist, otherwise you would never sign your name to the bottom of anything.
And the nice thing about that is that no, but it's so true. And I remember when I was running the financial lines team here, a lot of the team members agreed to commit a percentage of their future stock options at Howden into the first iteration of what became Humanity Insured. And I said to David Howden, my God, Dave, we got £5 million raised from the employees in Howden. And he said, well, how much insurance is that going to buy? And I said, well, I reckon at 5% rental line, we can get 100 million of insurance for that. It was at the Glasgow conference. And he turned around to me and said, so Charlie, what's the shortfall in global, humanity? I said, well, it's 20 billion. He's like, go away and come back when it's 2 billion of insurance you're arranging. And I said, well, to do 2 billion, we're going to have to create an independent charity, David. So that's what we did. So basically, with quite a small amount of money, we could bite off 10% of the entire global shortfall in humanitarian funding. That is feasible using the tools in the insurance market. So it's that type of maths which drives us, I think.
We mentioned at the beginning that multiplier effect of $1 in premium being worth more than $1 in aid, just direct aid. How can anyone who's listening to this, who's been inspired by what you've been getting up to, how can they get involved and what should they be doing? They'd be lobbying their own organisation to come alongside the other members you've already got, for example.
Yes. Well, that'd be amazing, wouldn't it? I mean, nice thing is that we're a very young organisation. We need ideas. We need help. People who know of communities in parts of the world which are suffering from these types of perils, people who have got ideas of how we could trigger money to the benefit of organisations. So there's an insurance-y bit, a modelling-y bit, a sort of insurance underwriting innovation-y bit, which we're interested in. Of course, there's also getting the word out that what the insurance market can do, what it can really do for very large numbers of people who get this right. That is an important thing for me, because as long as people get the message that insurance can be used in this way, it'll allow us to show corporates with supply chains into this part of the world the benefit of these types of tools, as much as it does an insurance exec who thinks this is worthwhile. So what people can do is help us with ideas, help us find projects, help us obviously find funding, but also just talk about what amazing things insurance can do. That's enough.
Absolutely. It's been really interesting talking to you, seeing how you can make money go a lot further. You're applying a 20 times multiple to it. It's very powerful, isn't it? And it's something we can all be proud of. We're all part of the insurance ecosystem.
I hope so. And I think, one of our aims is it's quite hard subsidising insurance premium. And what we're doing is that we're working with projects where, in the majority of projects we have, where there's an out for us. So what success looks like for Humanity Insured is, yes, having 30 million people, brand new insurance owners globally in difficult parts of the world, but also is us being redundant as a funder. So some of our projects, we know we will not be needed in 4 or 5 years' time because we've allowed a community to use a tool that we all take for granted here. And that actually, in itself,
so you allow them to increase that.
That's our impact.
Yeah,
that's our impact. So I think that's how Humanity Insured will iterate and grow and change. It'll be, hopefully, over the years.
Yeah, so those people, you've enabled them to do more economic activity and reap the benefits of that economic activity, and because you've taken away some of the downside of that.
Some of the risk. And I get it. I live in the south of England, but if I was living somewhere where, my God, I was worried about a drought every other year, I wonder what I would invest my money in.
Yeah, even so, it's hard enough being a farmer here.
Oh, totally.
Because the weather is incredibly unpredictable. We've had a very dry spring, haven't we?
Totally. That is a really great point.
Absolutely. If anyone who's watched Clarkson's Farm will know how hard it can be.
Quite.
Charlie, thank you so much for your time. Good luck with everything you're doing. And we'll make sure we book in a time at some point in the future to check in on all the latest projects you've been getting up to. It's absolutely fascinating. Thank you very much.
Thank you so much. It was really nice for me to have the opportunity to talk about it and just think about what can be done next. Thank you.
Thank you.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this programme. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance podcast is produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass.
Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.